The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we continue to take a look at the market trade, wrapping things up on Friday, kind of ended up with a mixed bag in the grains and in the livestock trade as well. Maybe not the best way to end the week, but we have plenty to take a look at, no doubt. Joining us for a conversation, pleased to have him on Market Talk for the first time. Jeff French with Ag Hedgers is joining us. Jeff, it's good to have you on the show. Thanks for joining us. Hope you're doing well.
Jesse, great to be here, and first time, and hopefully not the last time on the show.
I don't think it's going to be the last time, that is for sure. Appreciate you joining us here as we kind of wrap up an interesting week in the market trade. You know, we had all the USDA data last Friday, of course, hit the market. Then we had the 3-day weekend. We came back in. We kind of traded more of that data, it felt like, and then Thursday, I was like, okay, maybe we're getting a reversal in these grain markets. Friday, not so much. Really just kind of fizzled out to end the week. Your perspective, just this week of trade, I guess I'm not finding much of a rosy picture here, but maybe I'm wrong. What are you thinking overall in grains, Jeff?
Yeah, I mean, it's not too rosy. I mean, like you said, we came in here after the 3-day weekend and traded some of that report news from Friday. We hit the new contract lows in the March corn. We took out the psychological support of 450. That was a big number, and now we close below it to close out the week. But if you go over to the beans tested that $12 mark multiple times and were able to hold that area. So, you got both sides there, corn taking out the support and the beans holding the support. So I think we just got to kind of move forward here, especially in the beans. Brazil right now is only 2 to 3% harvested. All eyes are on down there. One of the main private analysts that we follow here is AgroConsult, and they were out this week. They did lower their bean Brazil number down to 153 metric tons. Still an awfully good crop, just under their record crop from last year. That was down from 158. Right now the USDA is at 157 million metric tons. So as we progress with harvest down there, we're going to get a better idea. But there's a wide range. I mean, some of the bulls down there have it at 130 million metric tons. I don't know if it's going to be down that far. But it certainly looks like it's not a record because it was drier. They've caught some rains here recently, but the northern area definitely did take the top off. But the one thing you got to keep an eye on is the demand. Actually, this week we had really solid exports, but that was expected after coming off 2 holiday weeks. That was good to see on the export market. Pretty good export sales for U.S. corn and beans, and really the wheat too.
Yeah, and thinking of exports and thinking of demand, I want to get your thoughts on that, Jeff. I mean, we saw, as you mentioned, good weekly sales. We got a flash sale of beans to China on Friday. Haven't seen one of those in a while, but you bring up South America. China's largely been going to South America, and we really haven't seen, many of our other big export partners stepping into our markets. I mean, I guess at what point, how cheap do we have to go to try and stir up some demand? I mean, what are your thoughts there? What are you feeling in terms of, what could we do to chew through this supply that we have and find some demand that could help out these markets?
Well, and it goes right back to, so the corn, we have the corn. South America doesn't have the corn to sell right now. So, and our corn is priced competitively now. The Ukraine does have cheaper. Logistically, it's closer to China. So FOB, Ukraine is going to be a little bit cheaper. But on the vice versa, I mean, seasonally, this is when the Chinese start to shift some of their bean purchases down to Brazil and Argentina as the harvest progresses. So yes, the sales are good to see. They've actually had pretty good demand from China alone. Obviously, they've been spreading it out between Brazil and the U.S., but as we progress into February and definitely March, you will definitely see a more of an effort of the Chinese to be purchasing the Brazilian beans.
Jeff, talk to me about this a little bit here, and we don't have to get too deep in the weeds, but I think a lot of farmers are pretty depressed at some of these price levels right now, and a lot of them bin doors have been slammed shut in many cases. As folks are really looking at their marketing plan right now, the theme I've been hearing is you have to do something is better than nothing, but being smart, getting creative, and using all the tools that you have at your disposal is super important right now in this price environment. Would you agree with that?
Well, yeah, Jesse, but I mean, at this price environment, we've had positions on for some time, and now, with the reports, we'll put on some short-dated options and some cheap options, but we really want to be, from a seasonal standpoint, middle of January, not a really good time to be marketing grain, at least the physical market. It's terribly cold outside. The roads are terrible. Basis, it's been pretty weak. I mean, it had a little bit of an uptrend here this week, maybe a little bit of a bias there. But from a seasonal standpoint, you really don't want to go out on a limb here in the middle of January and start calling that tops or bottoms in this market. I mean, yes, I'll make an argument that, corn prices are down here at 3-year lows, but we have the entire season ahead of us. We've come into this fall and winter very dry here in the Midwest. I think it's this last 4 years from 2019 to 2013, at least in Iowa, it's some of the driest years that we have on record for 4 years consecutively. So there's still a lot of things that can happen. And that bearish side of the boat right now is getting awfully heavy. And we've all been through markets where it tends to slip one way, while the market will just turn around and do the exact opposite. So, I don't want to get too bold up here, but again, you just have to remember the facts that, we do have a 2 billion bushel carryout, and I'm taking out all the inflation, all the inputs. But if you look back in time when we've had a 2 billion bushel carryout, typically corn futures are in that $4 to $4.25 on the board. I mean, that's just where they've been. That's historically. I don't know if it's going to happen again, but you have to look at where we've come to predict some of it in the future. So we'll see what happens here.
No, good thoughts for sure. I've had some folks ask as well to get some thoughts from people on looking at not just 24, but 25 crop years. I mean, are you getting super far out there at this point, Jeff, or at least having an idea as people develop a plan right now? What's your thoughts on that?
Again, anything right now, unless you are absolutely have to sell cash. Okay. Right now we would much rather, with the prices where they're at, with being where we are at on the calendar year, we would want to have it on paper than stepping out and start selling in the cash market. Just because, we'd like to get into that June, July, August timeframe, maybe get a little bit of a weather market rally, take advantage of that. So I would just say, if you do have to make the sale here, I would make sure you buy it back with some call options, because when you're forced to sell, sometimes that is the some of the lows in the market.
We are joined today by Jeff French from Ag Hedgers here on Market Talk. Jeff, let's go over to livestock, cattle. We're talking just ahead of the release of the Cattle on Feed report. I know we've had a string of Cattle on Feed reports now where we've gotten some sort of surprise number that was higher than expected. Your thoughts as this market kind of wraps up the week, though? I know the weather's been a big impact in feedlot country here this week. What's your take on this cattle market and where things stand right now? Give us some thoughts.
So the cattle yesterday traded up to a 2-month high. Got through the fat cattle February, got through the 50-day moving average for the first time since October, when the entire meltdown began, that 2-month sell-off. So that was good to see. But yes, the rally seasonally, you want to be long cattle from mid-December into the end of January. But also, yeah, the weather has definitely affected logistically moving cattle around. getting them to the packer, obviously, and they're not gaining in this type of weather. They are just eating to survive. But if you look where we've come here in the last, we made our low the first week of December. We've had a nice, $10, $15 retracement in the fats and $20 to $25 retracement in the feeder. So I look at this cattle on feed report. The last couple cattle on feed reports, the placements number has been higher than expected. The on feed has been running, the last 4 or 5 months, it's been running the numbers higher than the previous year. So they are expecting 102% on feed, 95% placements, and 99% marketings compared to last year. The marketings number is friendly because we had one less marketing day during December 23 compared to December of 24. So, demand remains domestically very, very strong. But I look out here right now after this rally we've had. I look at some of these deferred contracts in that 180, 185 area. This is where now I'm talking to my clients to get some downside protection because historically that's some very expensive cattle out there.
Jeff, I know you're in Iowa. You're in hog country too. Hogs have done their best here since the first of the year to try and rally a little bit on the futures board. That's been a positive in my eyes. I know for the entire pork industry, we've been watching a lot of pressure on Chinese pork prices too. I mean, things like that. What's some thoughts in this hog market right now, Jeff? I mean, do we think that we could continue to maybe have a little bit of a bullish gleam in our eyes to some extent here in hogs for the short term, Jeff?
Well, it definitely, we kind of came in pretty negative. I mean, there's been mass liquidation throughout this industry. I mean, that's been known, been talked about for some time. That's nobody's surprise. But, we had that nice rally. We kind of came out of the hole. We've got, $5 to $7 off the lows here, but now we've kind of started to run into some resistance areas. Again, I look at the summer contracts in that 90-cent range. We are just telling producers, hey, get some protection to the downside because going forward here, hopefully, we are up there come this summer. But we've all seen in years past where, the futures can come down from there. But I think better days are ahead. Obviously the industry has bled a lot of red ink the last 12 to 18 months. But I think we might be seeing some light at the end of the tunnel, especially on the hog market.
Well, that's hopefully the case. Jeff, before we let you go here today on Market Talk, great stuff, great thoughts. Anything final you would share or reiterate to folks who are listening in here today?
Well, I would just say, find an advisor. You have options available to you where you don't have to go out and commit that physical grain. Especially at these prices, there's tools where you can buy put options to protect the downside where if prices continue to go lower, that put option will come to appreciate. So at these levels, we just don't want to be going out on limb and contracting a lot of physical grain. But again, if you have to, there are some re-ownership opportunities that are pretty cheap out to July. I would just make sure that, especially going forward here with these markets right now could be awfully thin, meaning, a 40 or 50 cent rally in corn might be awfully big. So when it does happen, you have to have a plan where you take advantage of it, but also you have plan B in case it doesn't execute.
Jeff, good stuff. If folks want to reach out to you, you mentioned, having an advisor, maybe they want to work with you. How can they reach you, Jeff?
Aghedgers.com. Or you can reach us here at the office at 312-217-0122.
Fantastic. Jeff French with Ag Hedgers. Appreciate you being on Market Talk with us. Thanks for the time, and we'll have to get you back on the show again real soon. Thanks so much.
Jesse, thank you. Have a great weekend.
And that's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.
If you miss an episode of Market Talk, you can listen back to the show anytime. Just search for Market Talk on your podcast platform of choice, and you can hear past episodes of the program on demand.